Hi there, this is Bill with Smart Trades, and it's Wednesday around 10:40 Pacific time, um, and going to do something a little different today. Going to take a look at a variety of popular stocks and weigh their relationship to the indices in general and also to the economy, and just look at their patterns, volume, so on and so forth. Anyway, at the top of the list, Alcoa. And we can count an impulse wave down off the high, also breaking a trend line. And let's take a little broader view, and you can see that ascending wedge pattern that we've seen in the S&P. But at any rate, off of that high, we have what appears to be an impulse wave in that it's a very sharp move, and you can even count the subdivisions, which I don't normally do with stocks, but they don't have the kind of participation that would necessarily create the Elliott wave patterns. But that said, we've got a pretty nice 1, 2, 3, 4, 5 down. You could either count the 4 here or here, and it's hard to say exactly where we are in the count from there, but it looks like we need a corrective bounce. The other thing of note, obviously the breaking of the trend line, and look at the jump in volume here on the decline. And that's indicative and a confirming factor along with the pattern and the trend break and the 5 waves down, the impulse to the downside. So at any rate, it looks like a trend change in Alcoa to the downside, probably going to get a little bit of a bounce and then significantly lower prices. And it's significant also because Alcoa is going to be a surrogate for the economy in general, as is Exxon. And here's the Exxon chart. Interesting as well. Not quite the crystal clear impulse wave to the downside, but a very clear trend break. And also what's interesting here about this pattern and this chart is you have right at the long-term trend line, you have an ABC pattern, and the break of that pattern here produced a nice little relatively low-risk sell. We can count 5 waves down also here, 1, 2, 3, 4, 5. And the other factor, again, the volume really jumped up on this decline, indicating that crude oil's got a problem, as well as Exxon and probably the economy in general. Let's take a look at Home Depot. Home Depot also, let's scale out a bit, and you can see that ascending wedge. Now Home Depot, unlike the previous two charts, looks like it needs another new high here. The decline off of the high so far is corrective looking. It's overlapping. You don't have the huge jump in volume, and it's reacting pretty well to the supporting trend line. So Home Depot could see new highs, but I would be leery of it up here around 30 or so. And let's take a look at Caterpillar. Caterpillar, again, like the other charts, has an impulse to the downside, a jump in volume, a clearly impulsive looking pattern that broke through support, and the pattern can also be counted as a 5 wave sequence to the downside. Probably going to bounce a bit, perhaps come up and fill this gap around 55, but I think we've got a trend change in Caterpillar as well. Microsoft, fairly impulsive looking to the downside. Possibly you have a corrective decline here and then a failure and then a 5 wave impulse to the downside, again with increasing volume. If that's the case, that's quite bearish. Again, what we want is a confirming corrective rally that fails above this previous high, or at least above what we see as a possible failure at 31.24. The target area might be the 29 to 30 area, but we need more data to get a more defined picture there. And let's take a look at Apple. Now, Apple can be counted as an ABC decline. You've got, again, the big jump in volume here on the downside. This could also be counted as a series of 1-2s to the downside. And if indeed that's the case, we might get a corrective rally that would fail around the 202 to 205 area. If we were to fail there and make new lows, we could see a downside acceleration in Apple. I would be open, though, to the possibility again that new highs in Apple are forthcoming. It's certainly not out of the question. This is a more ambiguous count. And last but not least, let's look at Google. Google has a very nice impulse wave to the downside also. Look at the dramatic increase in volume on the decline. And again, you've got a clear failure at the top of the wedge, and then a nice break at the bottom of the wedge. And the really pretty clear impulse wave to the downside, 1, 2, 3, 4, and 5. Ideally, I'd like to see Google make one more run up, probably and fail to make new highs if indeed the top is in. A nice area to look at if we do get a rally off of these lows is look for a corrective pattern termination around the 580 level. That's both a 62% retracement of this decline, and it also fills this gap here. Again, that gap, to be more precise, is around 583. 82.98 to be exact. So we'll see how it goes. You know, there's no guarantee it's going to get up there and fill that gap. But again, the combination of the gap and the 62%, the nature of Google lately, I think that there's a pretty good possibility. But that said, any kind of corrective pattern termination to the upside is a sell, in my opinion, on Google. So let's watch it carefully. Anyway, thanks for watching. Have a great day. Bye-bye.